Good morning everybody and welcome to this European session on Friday the 30th of August, the last trading day of the week and the last trading day of the month. And what an incredible week and month it has actually been. Actually fantastic moves that we've had in the markets over the course of a month, which sometimes can be 50-50. A summer month, not many people behind their trading desks, away on holiday, volatility can sometimes shrink a little bit. But it's actually been pretty good. We've been highlighting some great opportunities throughout this week as well. So hopefully you've been participating in them and you've had a fantastic month as well. Of course, if you had any struggles or issues, then make sure you're booking in your coaching sessions, speaking to your coach, speaking to your mentor, letting them guide you and help you in identifying your strengths and weaknesses and just help you to move forward with confidence, belief, and consistency in your trading performance. So just make sure you're utilizing all of the resources that you have available to you in smart charts, because you have a ton of resources to really aid in your trading performance. But for now, we're going to dive into the market, see some of the key themes affecting the flows of the markets today, and highlight some potential trading opportunities that have been highlighted from the London and Sydney trading floors. All right, so let's dive in. So first of all, overnight, we had some news from Japan, which posted higher than expected inflation figures. And the Japanese yen slightly strengthened on the news announcement after the Tokyo Core Consumer Price Index, the CPI report for August, it came in higher than expected. It actually rose to 2.4% year on year, which is higher than the 2.2% forecasted. Now, CPI, we've spoken about this report, this metric multiple times this week because we've had a lot of CPI news announcements out regarding the US, Germany, and obviously Japan as well. And it's really important, okay, because what it does is it shows the change in the price of goods and services purchased by consumers. And consumer prices account for the majority of overall inflation, which is used to determine interest rate policy. So basically, where inflation is, this is what dictates whether central banks will increase interest rates, cut interest rates, or keep them on hold. And of course, the yen is a very interesting currency because it's been one of the biggest themes over the past month or so, where we had those massive crashes in the Japanese yen pairs, beautiful downtrends, high momentum, great for fast time frame traders, momentum-based trading strategies, phase changes of T waves and the medium time frames. And really, July was the best month of the whole year because of the crash in those Japanese yen pairs, and also the crash in the Japanese stock market as well. And this is because people have been expecting the Japanese government, central bank, to actually increase interest rates, which is the first time they've done that, literally for decades. All right, so we're looking for a continuation of that if it does develop. Now, the yen pairs, if you've been trading over the past several weeks, after those big moves in July, they have gone a little bit sideways. We've had pockets of cycles and trends, mainly on dollar yen because of the US dollar weakness. But at some point, that volatility is going to break out, isn't it? You know, the currency market is the world's most volatile market, okay? So when the market is moving sideways, at some point it's going to break out, volatility will increase, and we've got to be ready to capitalize on those trading opportunities. So something to be mindful of, okay? Patience has been required after those big moves on the yen pairs as we've gone a bit sideways, a bit lower volatility, but we're going to be looking for that volatility to break out and maybe try to continue the trend. And of course, I'll try to keep you updated on those potential trading opportunities as we develop through these webinars. Alright, so today we have the Canada GDP report released at 1:30 p.m. UK time, and GDP stands for Gross Domestic Product and basically measures the annualized change in the value of all the goods and services produced by the economy, and the Canadian GDP report is actually released monthly. Now the markets are expecting a slight fall in GDP to 0.1% compared to last month's 0.2%. Now remember, we don't try to predict news announcements, okay? We don't try to predict how the market is going to respond, all right? It's a surefire way to burn a massive hole in your trading account. No one can predict the future, all right? But we don't need to predict the future to make some decent returns for the market. What we want to look for is any surprises. That's the key, right? If there's any surprises to what the market is expecting, this is where we can get some of the bigger moves developing. So for example, this week we had a really big surprise in the New Zealand's business outlook report, which caused a massive move in the New Zealand dollar, right? Because it also went to a 10-year high and no one was expecting that. You know, we've had a big move in the US dollar this week because we've had surprises in US GDP data as well. So it's when the market gets surprised, that's where we're most interested in. And of course, you're not going to trade the immediate move. You can't compete with the algorithmic traders taking trades in literally nanoseconds, all right? But it's the follow through. So if there's a big surprise in the market causing people to readjust their positions, readjust their portfolios, then it's to follow through what happens after that. That's what we want to be trading, right? Because then there's a fundamentally led narrative behind why the market is going up or down, and that's obviously where the high probability trades will be. So we keep an eye out on these reports if there's any surprises, any big moves, and then look for the follow through afterwards. So we'll see if anything does actually develop. And again, I'll try to keep you updated with different opportunities that develop on the Canadian dollar if we do get a big move unfolding. And finally, the Dow Jones Index rallied 400 points yesterday to new all-time highs. And the US stock markets have recovered really well from early declines in the month, with the Nasdaq and S&P indices also close to record highs as well. And the reason stock markets are pushing higher is because of the lower interest rate forecast. Okay, that can help to boost stock equities due to cheaper credit fueling economic growth. Because when interest rates fall, people can borrow money cheaply, so they'll spend more money in the economy, which helps businesses. And of course, some people then, all that cheap credit also goes into the stock market, and businesses borrow money at cheaper rates to get in the economy moving as well. So the long-term bullish trends really are intact, and this even holds true for some European stock market indices as well, like the Germany 40 index, the DAX. The German stock market just reached a record high yesterday as well. So those trends are intact, and of course we've been trading the themes of lower interest rate forecasts in the currency market, but that also has an effect on the stock market as well, all right? And so sometimes when we get these fundamentally led narratives, okay, the beauty about trading multiple asset classes is that there's opportunities to be able to participate in those. Alright, so let's head over into smart charts and let's see what's going on in the market. Alright, so first of all, let's take a look at this daily chart phase changer on Euro US dollar. There's a couple of things happening here, okay? So we can see that price has just come from a phase 2 move. How do we know that? Well, actually yesterday, the trade that we took on the pip runner, Euro US dollar, was trading that phase 2 move. So if you remember in yesterday's European session, we highlighted the Euro US dollar. We had this on the 4-hour chart, the higher time frame, okay, we had this nice move towards the upside, nice cycles against the moving averages, but then we suddenly stopped making those higher high cycles and we started to get these lower high cycles and back below the moving averages. And we highlighted at that point, okay, if because we're in the moving average zone on the pip runner, we said, okay, we're looking for sellers to turn up here, so we'll continue this move lower, led on from the higher time frame. So we highlighted that trade there in yesterday's European session. You can check back on historical videos if you want, and that worked very nicely and went to the target level. Great. But this whole move to the downside is just basically a phase 2 move on the daily chart. So what we've just seen there on that 4-hour and the 15-minute chart, it's just basically this. That's it. That's all we're seeing. We're just seeing it in a bit more detail. So now what's interesting is that move to the downside we've been trading yesterday is just a phase 2. But now what we can see on the daily chart is that price is coming into an area where this daily chart phase 2 move could end, right? Because we've come into these moving averages where phase 2 has ended before and phase 1 could begin. So guess what? We'll be looking for the same thing to develop here as well. We'll be looking for this fall that we have seen on the lower time frames on euro dollar that we've been trading on the pip runners yesterday. We're going to look for that to end now because we're coming into these daily levels where historically phase 2 has ended and phase 1 has begun. So this will be interesting to see if there's still strength left in the euro dollar and if we can get price continuing higher. So Smart Chart is going to help us with this, obviously identifying the trade first of all, but if we click the buy icon here, it'll populate an entry price at the blue dot, stop us at the red dot, target the green dot. That can all be adjusted to your own user preferences, of course, and it will also do the risk management work for us as well and automatically calculate our stake per pip to make sure that we are risk managing appropriately and consistently per trade. And it's very important as well, we keep the risk low to navigate the random distributions of wins and losses that develop throughout the season. All right. And then on a daily chart, we like to use a current bar close expiry. So if buys don't turn up by the end of the day, it's fine. Then pending trade expires, didn't win, didn't lose, and didn't cost us anything. All right. So let's see if the theme of US dollar weakness, okay, will continue and get the euro dollar continuing pushing up towards this in an uptrend. All right. We've also had a look at a couple of things on the market breakout strategy, and we've been trading pound against Canadian, had a few orders on pound and Canadian this week actually, which never triggered. Buyers never turned up to get to the entry level, so that's fine. Sometimes that's going to happen because remember, if you're trading a trend, you're trading phase 2, right? So sometimes the phase 2 will just keep on going down and buyers don't turn up and your pending trade expires. So there's nothing wrong with that. Sometimes that will happen. All right. So it's the same thing here, okay? We have been highlighting that where we are right now in pound against the Canadian, very similar picture to where we are on the left-hand side, where price got above the yellow moving average, bounced off of it, went higher, came into the moving average zone where buyers turned up, went higher, came back into the moving average zone where buyers turned up and went higher, and then we stopped making this higher high cycle, and then of course the trend changed, okay? So we're seeing something similar here where price got above the yellow moving average and buyers turned up and it went higher, and now we're actually back into this moving average where we're looking for buyers to turn up here again and keep driving the market higher, okay? We also do have the fact we have an ascending triangle formation. So for those of you trading chart patterns, it's an ascending triangle formation here, which is a bullish structure. So we're looking for price to break outside of this bullish structure, okay? So if you're not too familiar, some people will see this as a resistance level, but in the structure of the chart pattern, it's a bullish pattern. We actually look for price to break out, all right? But again, in this instance, if you're not familiar with ascending triangles, it's okay. What can happen is that sometimes maybe buyers don't turn up and it might just drift off to the downside, and then you might be looking to trade it here on a daily chart or something like that. But in this instance, we're looking at what we have in front of us today, which is this movement here. And of course, we have the Canadian dollar news announcement. We don't know how that's going to be, but it's going to add a bit of volatility in the market. So just like this week as well, a lot of the different news announcements have supported our trades, haven't they? So we've had euro dollar pushing lower, getting to our target level. Beginning of the week, we had euro Swiss pushing lower on the phase change of 4-hour chart for the 2-to-1 reward to risk, helped by the weaker euro news announcement. We've had pound Kiwi on the market breakout strategy driving lower, helping our pound Kiwi trade to get to the target level, and that New Zealand dollar news announcement was sent it rallying higher. So because things are already priced in, okay, majority of the time the trends that you're trading, and they've been priced in because of the news announcement. Now, of course, sometimes, on the news announcement, we get a surprise and then the market might turn the other way, all right? But that's okay, because that's why we use stop losses, that's why we risk manage appropriately, all right, to deal with those situations. But of course, that could lead to new trading opportunities based on the follow through, all right? So let's see if buyers do want to turn up here on this moving average zone, as they have been turning up here historically before. So in this instance, by pressing the buy icon, Smart Chart will populate an entry price at the blue dot, stop loss at the red dot, target the green dot, which can all be adjusted according to your own user preferences, of course. It will automatically do the risk management calculations based on the percentage risk that you put in and calculate your stake per pips. It's important to keep the risk low, again, to be able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And then we can also set an expiry, and for this particular strategy, the market breakout, tend to set a end of day expiry. So if buyers don't turn up by the end of the day, that's fine. Pending trade expires, didn't win, didn't lose, didn't cost us anything. The momentum just basically didn't pick up. And on this type of strategy, you're looking for the longer term cycle, so we give it a bit of space, we give it a bit of time to actually breathe and actually continue a move. All right. Okay, so plenty of other opportunities to also take into consideration, so make sure you guys are tuning into all the live trading webinars developing throughout today, so you too can also identify them and participate them as well. But in the meantime, that's it from me. Have a fantastic trading day, have a great weekend. We'll be back next week giving you all the latest updates on market developments, market themes, and potential trading opportunities. Bye for now.